Hey guys, it's Kieran. Thanks a lot for watching. And what a week it has been. The last 2 weeks have been amazing. We've just crushed it. We had a really good Discord session a couple of days ago, and after that was my birthday, so I took some time out. But in particularly, I talk so often about how we had a clear bullish setup. And a lot of mistake people make is when the market goes really quiet, when it's in a period of extreme contraction, people get complacent, they do nothing. You still have to watch it every day because you remember in trading you're competing with one of the most brightest minds and there's no free lunch. People have spent years trading, some of them, and you're competing against them. So you have to really be ready for opportunities. But in particular, we had this huge dump below because of the FTX saga, and we dumped almost to this yearly low, so 15.5k, and we push up, and this was a key weekly level, 17.6k, and then push down. So this was the yearly open around 16.5k, and a huge push up here, and we've now reclaimed almost the monthly level, and actually had a bit of a wick above it. But I spoke about in the Discord group, especially about this key imbalance between 20.3k and 18.5k, and very often imbalances, they can take its time to fill, but you have to be ready because it can come to bite later. And I spoke about this so often in the Discord group and how eventually I expected to get filled. Naturally, I expected it before Christmas, but this is the reality of the market. Sometimes this so-called Santa rally, which people expect, can happen a lot later than people expect. And so it's always about being ready. And I had some really good long positions as well. I absolutely crushed this week, and particularly last week as well. So I had a long position for Bitcoin from 16.6k and also 16.8k. And I closed these positions for a really good risk reward ratio trade around 17.6k and 17.8k. I was a good amount of profit. And it's not like I'm saying this retrospectively. I told so many people in the Discord group as well. And a few of you actually caught the longs as well. After I exited the Bitcoin position, I also entered some really good longs in Ethereum, and it was a really good risk reward ratio trade, and I spoke about it in the Discord group as well. And so we had this dump because of the FTX saga. It pushed back up to 1,350 and it pushed down again, and we have it flirting with this 1,194 yearly open level, and we had to push back up again to this 1,350 level. And I was looking for a potential false break, but in the end I didn't trade this because I didn't see the risk reward set up really good. I didn't have enough confluence factor, so I left it. And so sometimes trading is a lot about doing nothing. It's an old analogy, especially some people are taught in pilot school. It's better to be on the ground wishing you were flying as a pilot rather than being on the air as a pilot wishing you were back down on the ground. And so sometimes you have to wait for a high probability setup. And so we had to push back down from here to this yearly open level from last year, and the push back up. And this case, it was actually a true break. We really flirted. We had really struggled to really break that 1,350 region in Ethereum. And once I saw the high probability setup again around here, I entered a long position. And this is the thing. So I entered a long position from 1,300, and then I added to my long at 1,330. And I had a really difficult dilemma because when price went to 1,400, I thought, okay, the setup is there and there's still a confluence factor as well. I had various confluence factors. I was looking at the volume, I was looking at the long short ratio, and the stars were pretty much aligned. And I added another long position at 1,400. And this week was just amazing. It just completely surged to 1,550 and 1,600. And I closed off all of my positions because it was such a good week. And why did I do this? Well, in particular Ethereum, we had this long sloping down trend line. And particularly we had to push up, push down, push up, push down, push up. And you have to be very careful because so many people expect there to be another dump, especially because we've got the CPI announcements, especially in Bitcoin as well. Bitcoin has a similar pattern as well. But the market does not give home runs. It's not that straightforward. So many people are expecting this to push back down. And sometimes you get a false break as well. Although this is pushed up quite violently, of course it can push back down, but I always say it's better to react to the market rather than trying to predict the market, okay? And so this just general principle really improve your win rate. I actually recorded my statistics for the actual last month, and so from 18th of December, for 30 days, I recorded all my trades, which I always do to really learn from them, and off more than 100 trades I placed, I had an 82.26% win rate. And this basically means I've won more than 4 to 5 trades. And obviously there's more to learn, but it's just being more reactive rather than predicting has been instrumental to me. And so I really hoping to really monitor my trades and really keep up this win rate, but it's just been an amazing month and still more room to learn. But I know from my experience as well in Ethereum, there's actually very little gap, especially sometimes when you get a clean break above 1350. And really speaking, there's very little room till around 1650, to be honest. And so I kind of expected a very little gap here, and especially looking at certain things like the volume profile. And so I left my trade to actually run. Other key levels that I'm also looking is this 1650 region and of course the 1790 region. But of course, one step at a time. You have to also really be careful as well. Of course, you've got this run up here and people are very bullish, but you also have to consider certain things. And a lot of people don't have enough market exposure. Sometimes you get a run up like this, push down, a higher low, and push up. And at this point, people get really excited because they think, oh, well, it's a higher low and it's a higher high. But sometimes, although structure looking good, sometimes you get a push flush back down. Okay? And so you have to be really careful. Don't get ahead of yourself. You really need to take this market patiently and take each step at a time. Something else which has really been interesting as well was really looking also the long to short ratio and also, of course, open interest as well. I will be speaking a lot about this in the future. But just looking at the chart in particular, I noticed certain trends. And so in particular, for a long time, the long to short ratios, so this is particularly the position of longs, especially retail longs, compared to retail shorts. And of course, we know the market makes fools out of the most. Markets are only designed such that only 1 to 5% of people generally win in the long run. And generally speaking, only professionals win in the long run, but all of us can improve, of course. In particular, we had this huge spike in volume. The long to short ratio decreased. And so in particular, there was net short. More and more shorts were accumulating and open interest increased. At the time, around 16.8k, 16.9k, and 70.1k, so many people were saying, oh, we're going down, we're going down. And you have to really listen to your echo chamber. Did this really look like a market that's going down? The whole market is net short. Open interest is increasing. So that, to me, this overall picture indicates to me that short positions, especially retail, were accumulating. And so we had this huge decline in long to short ratio, and the open interest was slowly creeping up, okay? And of course, market makers really caused mass pain for the majority. And we had a huge spike in long to short ratio. And I believe that this, especially this move up, was mostly due to retail shorts just being liquidated. And at this point, believe me, retail shorts were not underwater. They were underwater. They had drowned, and they were put in a coffin, and the coffin was nailed. This last couple of weeks, retail shorts have got completely buried, okay? And so many people were adamant that Bitcoin has to fall at 70.6. It has to fall at 19k. I hope you've really learned the lesson now that anything could happen. The market does not care about your opinion. And just the last 7 trades, I've won all of them. And again, it's that principle of being reactive rather than predictive. And so even still now looking, is still retail so short. Just look at it. Retail is so short right now. So it's just, I'm going to be monitoring the long and short position and of course the open interest as well. But just keep a head out and don't get ahead of yourself, honestly. Something else to really consider in particular was the last couple of days in particular, you have to really pay attention to the volume profile. And in particular, we had this, of course, this huge volume here, this huge volume, high volume nodes around here. Especially, we had a couple of gaps around here and here. And the interesting thing, especially, we had this huge gap around here. And so this 18.5k was pretty much non-existent. And so you really have to take things in context, okay? And we had this high volume node here. And price just surged up. And completely ignoring this, you have to always consider these volume gaps. And currently, the high volume node, especially for the 1 hour, is around this region. So 20.8k, around that region. And we have also certain demand zones and supply zones as well. And around this 20.9 to 21.5k is a key order block and supply zone from 2nd of November. And of course, the 1st of October as well. This 22.1k and this 22.6k is a key order block and supply zone as well. So we really need to see, first of all, can we get a high time frame closure above this 21.5k? And perhaps we could get a run up here. But always be careful. Don't get ahead of yourself. I know so many people now feel left out. And it's understandable, but you have to realize that very often it's because you don't have enough market exposure. Some of you are saying, oh, I should have bought at 19k. I should have longed at 18k. But it's not that straightforward. In hindsight, it's obvious, okay? But At the time, did you actually pull the trigger? Be honest with yourself. And if you didn't, it's fine. It's just to keep learning from this process. At the time, do you know how hard it was? I opened so many long positions, and of course, I harp on about risk management. Risk management is so important. I'm not risking more than 0.5 to 1% of my portfolio. And at any time, I do not want to have more than 1.5% exposure of my overall portfolio in any positions at all. And so this is my point. At the time, to actually pull the trigger, it requires guts, okay? You have to embrace uncertainty sometimes. It's a fine balance between competence and uncertainty. And the reality is that some of you are now saying, oh, I'm going to wait for a pullback to 18.5k, or I'm going to wait for a pullback to 19.6k. But you need to take each day at a time. You need to remove your biases. And if it pulls back to 18.5k, don't be rigid. You need to adapt your analysis, because perhaps then it could be an actual bull trap. And so remove your biases, take each day at a time. And now there's two types of greed in this market, especially. So the first type of greed is when people keep their long positions open too long because they're expecting so much profit. The second type of greed is when people are just so willing to get a dump so they can buy at a better average. So many people are waiting for a dump to, especially 19.6k region. And I myself, just going to draw Fibonacci from this region. I myself, I was really looking for region dump potentially to 19.5k, 19.3k region, but it's not going to happen all the time. The market doesn't really care about your opinion. And the way I see it is consolidation is often constructive. We're really consolidating around this. Potentially this could be some kind of bullish pennant, and perhaps we could have this consolidation and a measured move up here. And so if you draw a rough measured move, it comes down to, of this pennant, a measured move of this pennant roughly comes up to around 22.8k, 23k region. But again, most of you know that I'm not a huge fan of pattern trading. Of course, it's important, but the actual winner of trading based on patterns is actually quite low over the long run. The thing is, trading with a trend has been really useful, especially this last couple of weeks, because if you were adamant that it had to have a pullback, you would have got stopped out here, stopped out here, stopped out here. To be honest, there was no real indication in this whole uptrend whether we would actually pull back. There's no clear indication, really, to be honest. The structure had not changed. So it's better to actually trade with the trend in some cases, and especially in this last week, as we learned. And so, yes, of course, so this is a key supply zone, and if we do break above it, hopefully we might see a run up here, and potentially a run up here. Retail especially are waiting for a pullback to really long, and so the market can kind of push the order books up, and so the retail might actually miss their long position. And so we might get a push up potentially to 22.8k, as potentially even as high as this potential order block. But one day at a time, and don't get ahead of yourself. Something else I want to talk to you guys, especially, is margin pressure levels. And in particular, this 16.1k level was really interesting. And what I mean by margin pressure levels is because of that habits of degen retail traders in particular, it can really dictate sometimes the point at which Bitcoin bounces off. And in particular, this has been really backtested across 5 years, to be honest. And in particular, the 16.1k region was a 3x short margin pressure level. And so this is the point at which retail, really degen, less experienced traders can short Bitcoin on 3x leverage and hide the liquidation point above the recent local high. And 14.3k was a region in which degen retail traders can short Bitcoin on 2x leverage and hide the liquidation point above the recent local high. And of course, the 1x short level is around 10.5k. So this is the point in which degen retail traders can short Bitcoin on 1x leverage and had the liquidation point above the recent local high. I was really close around here. I pretty much nailed this bottom and I entered a long position and really got a good trade, but it's not 100%, but it's quite interesting because it has a way of sometimes becoming a self-fulfilling prophecy. Because it's a very highly leveraged instrument, the market has a tendency to bounce off, especially these 3x, 2x, and 1x short level. And so doing the inverse, so now looking at the long margin pressure levels, I can see now that especially this key level, and by the way, nothing in the market is by accident, and in particular this 20.6k region is the point in which you can long Bitcoin on 4x leverage and hide the liquidation point above the recent local low. This next really interesting level is 23.2k, and this is the point in which you can long Bitcoin on 3x leverage and hide the liquidation point above the recent local low of 15.5k. Going further up, 30.1k is a region which you can long Bitcoin on 2x leverage and hide a liquidation point above the recent local low. It's interesting because so many degen retail traders open long positions and not really using stop losses. And sometimes the market can have a self-fulfilling prophecy, and these levels do line up. We've actually had a bit of a resistance and a bit of a fighting battle around this 20.6k region. So looking at the rest of the market, in particular S&P 500, we've had this trend line roughly going all the way from January, of course, and it's a very long-term trend line. We had a push down, push up, push down, push up. So it's acted somewhat as a resistance. So the real question now is, do the buyers step in and actually blast through this? Or do we get another kind of fake out? We push up, push down, lower high, and flush out to new lows. So that's something to really watch out. And of course, the market doesn't really give home runs. A lot of people are watching the same thing. So you need to, of course, be ready for fake out. So just take each day at a time. I'm just now looking at the Dixie as well, and the Dixie just had a complete nosedive for a long time now, and now we're currently around this 102 region, and people always get it twisted. So the Dixie is a basket of fiat currencies. It includes the dollar, it includes the euro, and people have this perception that, oh, Dixie has gone down, therefore Bitcoin and risk assets have to go up. And whilst that is a general correlation, that inverse correlation holds true for longer time frames, especially the daily, in smaller time frames, not so much sometimes. In the hourlies, for example, the Dixie can go up and Bitcoin can still go up, and inverse. So take things in context. The Dixie is a basket of fiat currencies, so you always bear that in mind. And of course we are dropping, but what goes down has to come up, and what goes up goes down. And whilst we are falling down, this could easily be a falling wedge with potentially a measure move back up to around 107 region. Looking at the US 30, and again, it's kind of similar to S&P 500, we've had this kind of falling formation, so push down, push up, push down, and of course this similar trend line. And so a lot of people are watching this, and so do we really, again, hold suit and just hit the resistance and push back down to potentially a measure move, so potentially around this region, or do we kind of have a fake out, and so potentially another move like this, push up, push down, push up, and then flush out? So that's something to consider as well. So I'm just watching all of these things. And of course, looking at oil as well, we've had this downward sloping trend line, and we've had this push up, push down, push up, push down. And so this whole year, we've really been floating around with it. And the real question is, do we really float with this again, push back down, and potentially have a breach of this new low and meet this targets around 63 and 656? Or do we push down here, get a potential false break, and then flush down again? And so I'll just be keeping a close eye on everything. So guys, thanks a lot for watching. I set up this YouTube channel quite recently, so do like and subscribe. I post my market analysis here, and of course I post a lot of content on how to trade and really sharing my trading journey. Thanks a lot for watching, guys, and I'll catch you in a bit.